Okay, guys, this contract is one where we have found a homeowner, a motivated seller that does not have enough equity in the property for us to make an all cash offer. And so let me just give you an example. You have a homeowner that has a $150,000 house. You have a homeowner that owes 140 on that $150,000 house. The key ingredient is two things. The house has to be in good shape, meaning it doesn't need foundation work, a new roof, a complete overhaul on the cosmetic. These are newer houses in nicer areas where a homeowner has had a hardship and is motivated to sell their property, but they're having a difficult time because of the market, the conditions in the market. And hold on one second, let me close this out. What we're doing is we want you, Tim and I want you to control this real estate and get this property under contract, because what we're trying to do is find an end buyer instead of an end investor. And what's attractive to the end buyer, this contract is going to be attractive to them because you are offering built-in financing. And think about this. Who out there, there's a lot of homeowners out there, there's a lot of buyers out there that can't qualify with traditional financing. Well, you're solving that issue because you're getting properties under contract, never having to buy them, but you're controlling them in a way where you can sell that contract to a buyer who can't get traditional financing. And they, in terms, and they take over the let me show you how to write up this offer and control this, and then walk through a few addendums that you'll need in order to take this and get exact payoff information and exact information or exact balances and terms of the loan. So here I am, I've got page one. Again, you need to watch the all cash video because I'm going to go through this one a lot faster than I did the purchase and sale contract all cash. So watch that. That's a 30-minute video. This is going to be a lot shorter because I've already filled in the blanks and you've already should have watched how to fill out this contract. There's a few different nuances and a few different forms that I'm going to use. Okay. So number one, let me click here. The seller was Tim Harridge and Jennifer Harridge. And the buyer, again, is yourself. You'd put in your name and or assigns. You have the lot, the block, the subdivision, the city, the county, and the actual address. Coming down here, this is the seller wanted to make sure that they could take their foyer light fixture with them. Now here is the difference between an all cash offer, and remember, we always have an opportunity to make two types of offers. One is all cash and the other is taking over payments. Here's the big difference. Instead of writing a sales price, we want you to put C Exhibit A. All right, C Exhibit A says we're going to talk about what the sales price is on a different document. We don't know exactly what we're going to pay because we don't know yet what the balance is. What I want you to do, what we want you to do is get this property under contract, and you can always find out 2 to 3 days later what the exact payoff is and what the mortgage payments are and what the interest rate is. Certainly you can ask that question when you're sitting down with a homeowner, but we need to get it in writing because the end buyer is going to want to see that in black and white or on paper. So whenever you have a homeowner that wants to sell their property but they don't have enough equity for you to make an all cash offer, then we want you to write an offer where we take over payments. So on 3A, 3B, and 3C, I want you to write in C Exhibit A. And here you can see that I can't fill it in, but I want you to handwrite C Exhibit A. So 3A, 3B, and 3C is C Exhibit A. On the financing, we're going to just leave that blank again. We're not going to fill in the financing part. You initial, both you and the seller initial. Then we come down here and you can put in the same earnest money as you did with an all cash offer. This shouldn't be a lot different than an all cash offer except for our sales price. So the earnest money, which we'll deliver to the title company within 2 days. Who pays for the title policy? Now here's the thing. we'll put in that we'll pay for it if the and that really depends on the buyer. The buyer is going to pay for that, and the buyer is going to make a decision if they want to get title insurance. On a taking over payments situation, most buyers choose, because there was already a title policy in place, they choose not to get a new policy. So we'll put that in there, but that's really ultimately the buyer's decision. And we're selling this and packaging this contract up and then putting it in front of an owner occupant buyer. Scrolling down, we've got the survey. Still, we want you to get the survey from the seller because that's just good information to have, and most likely the seller already has one. So get the survey from the seller. Again, at the bottom, initial. Page 3 is it in a homeowners association? Again, it's a lot like the all cash. The similarities are there between an all cash and a taking over payments. We're going to write and use, and a lot of the same attributes are there in either contract. So is it or is it not in a homeowners association? Then we scroll down, and that's it on page 3. Page 4, we come in and we put in we have or haven't received the seller's disclosure notice. Again, watch the seller's disclosure notice video on how to write this up. Or excuse me, you don't write it up, you have the seller write it up. And again, you have 7 days to shop this contract without any liability. And once they give you the seller's disclosure notice, that's when you have 7 days. And it says the seller will get that to you within 5 days of writing this offer. Scroll down, we're going to take it as is, and then we're on page 5, put in the closing date. Now here, I believe that you can close this. You can put in a date longer than 2 weeks to a month. You might put in a month and a half. At the end of the day, it comes down to the seller situation on how fast they need to move, and maybe there's a pending foreclosure. So we need to find out what the needs and wants are of the seller in order to fill in the closing. But I would typically put in more of, today is August 2nd. I might put in 30 days, or you could put in September 2nd or September 9th. You typically, I have longer period of time, but again, it just depends on the seller situation. If they need to move quickly, then we can always act quickly. At the end of the day, you're trying to find an owner occupant that's interested in buying a nice house with no equity and with built-in financing. On possession, we'll do upon closing and funding. Special provisions, if you are a licensed agent, you need to disclose that. And then always, let's put in at the buyer's option, this offer will be null and void if not accepted. So you always put that caveat in there just so you don't have any open contracts, because part of this program is you've got to write a bunch of offers and not all of them are going to be accepted. And so you need to make sure that you have an out clause, that you don't have this contract. The seller could accept this contract at any time. Put in a date where it's null and void. Scroll down, you have the settlement. We're not going to fill out, we're not going to have the seller pay for any of our closing costs on paragraph 12. Mediation, check, we will mediate. And that's it for page 6. Page 7, come down here, and I'm going fast because I've already talked about this. I've gone over paragraph by paragraph in the all cash purchase and sale video. So if you want to go through and figure out what each of these paragraphs say, then you need to watch the purchase and sale all cash video. Again, the notices, put in the notices where the title company might send items, and then put the seller's information. It's usually the property address. Unless this is an investment property, then you put in where they want to be sent information and put in their phone number and fax and email. Again, every page you initial. So we're on page 7. Page 8 is The last page, and this is the signature page. Now here's the difference. We might have a property that's older than 1978. We might need to use our lead-based paint addendum. So you click on that. We might have a property. In most cases, if you're going after newer properties, there's going to be a mandatory homeowners association that we need to talk about. So we need to choose that addendum as well. The big thing is, instead of addendum A, you're going to use exhibit A. Exhibit A, because we said see Exhibit A. We need to document this on the contract, that there is an exhibit or another document as a part of this contract. As always, we want you to have a termination option. You're going to pay for that, $20 in cash. And here you might put 15 days. It's not uncommon to have a 15, well, I shouldn't say it's common, but it's not unorthodox to ask the seller for 15 days. You see, once we get this under contract, then we need to start blasting out to the community, to people that want to buy in this neighborhood. And how we do that is we're putting it on Craigslist. We're putting it on Backpage. We're advertising it to anybody and everybody that wants to own in this. And we could send, put bandit signs. We want to market this deal to owner occupant buyers. Consult an attorney. We don't have any attorneys, and then everybody signs here and dates it. The last person to sign this contract is the one that dates it, and that's the effective date, and that's the following day is the first day of the option period. Page 9 is, we don't have any brokers involved usually, so you won't fill out the top part of page 9. The option fee, you definitely will. You need to get the seller to sign that they received $20 in cash for the option fee. And then the earnest money, you're going to deliver this contract to a title company, and they're going to fill in the information here. So that's it on the contract. Now let's go to the two other documents you're going to need to have the seller sign and or fill out. So here we are on the Exhibit A. The Exhibit A is a part of the contract. What we have is the date, the property address, and number 1 is, this is where we've talked to the seller and I've asked the seller, what is the minimum that you guys need in order for moving expenses and or your equity. This is where I'm going to put in an actual dollar amount. See, on the Exhibit A, we're trying to do, it's somewhat like a net contract. What do you want to walk away with, Mr. and Mrs. Harridge? What do you want to walk away with when we close on this property? And don't tell me, it doesn't matter what the sales price is, whether you're upside down or you have a little bit of equity. What is the minimum that you guys would be willing to take? Let's figure out that, and then I'll structure the contract. But this basically tells how much you're going to pay the seller at closing, or the end buyer is going to pay. You're going to shop this contract to the end buyer, and you're going to negotiate with the end buyer a dollar amount for the assignment fee. But the buyer needs to understand that they need to pay Mr. and Mrs. Harridge $2,000 net for the equity in their property. So in addition to the amount that they pay you for an assignment fee, they're also going to have to pay, in this case the Harridges, they're going to have to pay the Harridges at closing $2,000. Now, do we have to close at a title company? The answer is no. You don't have to. What you need to do is draw up, and this is what an attorney would do. They would draw up the closing documents and the disclosures that the end buyer needs to know that they're taking over a loan payment. What are the risks and benefits of that? Number 2 is the investor or the buyer. Let's change this to buyer/investor agrees to take over all liens and judgments recorded with the county clerk. So you'd put in the county in which the property resides right here. Then you have number 3, the seller agrees to leave the property vacant prior to when ownership is transferred. In the event the seller has not vacated the property when ownership is transferred, investor reserves or buyer investor reserves the right to keep the seller's proceeds until the seller has vacated the property and the buyer investor has inspected the property and the keys are provided to the buyer. So we're going to keep their $2,000 if they're not out of the property. In the event the property is not left in clean condition, the buyer investor will assess a cleanup fee of either $1,500 or actual expenses to clean the property, whichever is greater. Each room shall be vacuumed or swept and all trash is to be removed. Again, you got to work within the guise of this contract, but I'm just letting the seller know that, look, we don't want to have to clean this thing, to clean the house out before you deliver it to us. We understand that you're in a tough situation, but at the same time, we've got to charge. It costs us money to clean this property out. The last thing is seller hereby grants the buyer and or their representatives all rights to list for sale, market, negotiate, and or assign the rights of this agreement to a third party. Buyer intends to profit in this transaction. Seller will provide the buyers with a key to the property and allow entrance to the house during normal business hours. I think it's important that we put that in, that we're going to need to bring people over. We're going to show this property to several buyers and we need to have access to the property. The sellers, they print their name and sign it right here, and then your company name or your name, this is where I would put in George Roddy, and then I would put in the seller's name. So you put that in right here, and Jennifer. I hope that makes sense. So this is the Exhibit A. This spells out how much are the Heritages getting in this transaction. Okay, so this is one of the documents. Now the last document is an authorization. Let's look at that. Here is the authorization to release information. Now, I'm going to go through this, but the reason why I want you to get this signed by the seller is we need to get payoff information. We need to get the terms of the loans involved, and what are the interest rates, and what are the monthly payments, and what are the obligations for all of these liens. So here we have the date. I give permission for you to release any and all information to the agents or persons listed below. And here's where you would put in, I would put in my name, because I'm the one that's wanting to get this information. And then I would put in my office, my cell, my fax, and my email address right here. And then I'd put in the property address, 4851 Keller Springs, Addison, and the business phone, and the phone and the social security numbers. Now, all we need to do is get the last 4 digits. I don't want you guys to have the full, we don't need the full social, but it's important that we get at least the last 4 digits. You're going to fax this to the lenders, and they're going to provide you, they're going to talk to you like you were the borrowers. Then you put in what are the lien holders, what's their names, the loan number, the phone, the fax for both the first and second liens. Then you come down in the seller or borrowers, they print their name and they sign their name and they date it. This is what is going to allow you to get access to the seller's, lender's information. If you don't have an authorization, what we call an LOA, a letter of authorization, then you're not going to get anywhere, and you really need this information in order to package up this deal and know all the moving parts of this loan or these loans. So that's it. That's how you write up an offer where we're going to take over payments, and we're going to show you, and at the end of the day, you can wholesale high equity deals and you can wholesale low equity deals. But the key ingredient is if it's low equity, it's got to be in good shape, meaning it doesn't need a lot of work. And there's a lot of properties out there that fall under this, that they're nicer houses in newer areas in good school districts, but they lack one thing, and that's equity. Well, in this program, we're showing you how to control those properties, and then marketing in Module 5, we're going to show you how to package it up and market these deals. That's it for now.